It's my pleasure to host this panel. This is always one of the most popular panels, so I have the luxury of presenting this today with a great panel of speakers here today, different types of capital from right across the agri-food value chain. Alex did a great job presenting the data there, and our intention here is to dig in behind some of the numbers here, make this practical for the startups in the room as well. What can they be doing better to get some of this money and have big exits. So I'm going to start off by asking each of my panelists to introduce themselves, the organization, and where they focus on, what their investment priorities are. PJ, we'll start with you, and then we'll go down the rest of the line there.
Perfect. Thanks for having us, Danny. It's a pleasure to meet everyone. PJ Armeni with Leaps by Bayer. So this is the corporate venture capital arm of the broader Bayer AG group. I think they're well known, but it's really a 3-division company. So consumer health products, think Claritin, One-A-Day vitamins, pharmaceuticals, and then crop science, which is our largest division by revenue at this point in time. So Leaps is the 4th and separate division, and we're a one-trick pony. And that one trick we do is minority equity investment. So we don't do the partnerships, we don't do the M&A, but we really invest in startups and help them grow to a point where Bayer should want to partner closely with them, should want to help take them to market, should want to possibly acquire them in the future. And we have examples of all these use cases long term. I myself have worked in the ag industry for the last 18 years in various roles at Monsanto and now Bayer, and the USDA before that. But from a Leaps perspective, where we focus and where we're really aimed at from a crop science investment lens, we do aim more on the plant science side than the animal ag piece. When Bayer bought Monsanto, it divested its animal ag business. So to my friends in the animal ag industry side, I'm very jealous of the amount of capital going into that side of the industry right now. So it's a phenomenal thing to see. But really what we look at are next generation tools that are going to create healthy plants of the future. And so that's healthy for the soil, healthy for the consumer at the end of the day, and really adapting to the changing climate situation that was highlighted in the Driscoll's video, but is felt across every crop in every global region at this point in time. And then outside of that, looking at novel ways to protect the plant. And so novel new modalities for crop protection and ensuring that these plants survive all the different diseases, insect pressures, and weed pressures that come through the ecosystem. And then the final area that's something we've always invested in that's a little bit of a newer strict focus for us is around making sure that farmers are profitable and that we really boost farm economics. I think what we see is that only the top percentage of farmers here, even in the US, actually break into a profitable margin. And so really unlocking farmer economics allows them to adopt new technologies, allows us to push towards a more sustainable future, and it really starts with the finances. And so we're doubling down in that area as well. So thank you for having us.
Thanks, PJ. Erin, moving to you next.
Hi, Erin Van Landuit. I run the corporate venture capital group at Cargill. I think everyone in the room probably knows what Cargill does, but we do have a pretty diverse line of global businesses. So what my team does is specifically deploy capital and minority equity investments in growth stage startups. And we do that as a way to source external innovation for the organization that fuels our long-term growth. So we align very closely with what the organization's long-term growth objectives are. And we look for startups, growth stage companies to partner with that have technologies that we can't or won't develop ourselves. Maybe don't have the core competency, the resources aren't as close to the cutting edge of the technology in the market as we want to be. So we have a pretty vast array of investment verticals across food and ag. So things like next generation food and feed, better health for humans and animals, smart midstream and digital customer platforms. So that's really about transparency and traceability, supply chain technology. So that's all enabling technologies about digitizing and the industry, the food and ag industry. And then a sustainable and regenerative food and ag future. So that includes a lot, bioindustrials, petroleum, bio-based replacement for petroleum products, land and water usage, general carbon technologies. So we invest in quite a bit. We are in the process of narrowing down our investment theses now, but we have a couple of dozen spaces that we invest in, a portfolio of about 30 direct and indirect investments today.
Brilliant. Thanks. Yeah. Thanks, Erin. Doug.
Thanks. Hey, good morning. How about those Blue Jays? Just a little opener. Yeah, Farm Credit Canada. You'll hear me say about and roof, kind of funny. But I'm part of Farm Credit Canada Capital, which is a new part of Farm Credit Canada. About a year and a bit ago, we decided to try and introduce more capital solutions to enhance Canadian ag. We have a couple $1 billion mandate to go out and make a difference. So we're doing that through two main approaches. One is through the funds program, which existed before I joined. We're ramping that out and building it out through great partnerships like the one we have with SVG, taking it global as well, and then through direct equity investing. And so we've been building up a team to do direct equity investments. I sat here as a newbie about a year ago, and we had just completed an investment in Catalera, which was the first equity investment ever for FCC. We've done about 14 investments, deployed around 200 odd million subsequently, and we'll continue working at that pace. So we're looking for great partners, and we'll get into it later. Thanks, Danny.
Thanks, Joe. Finally, Lena.
Hi, everyone. Lena McAtee. I'm an investment manager and head of sustainability with ReFood. ReFood is a transatlantic growth equity firm. We partner with companies that are advancing sustainability in the agri-food system. We do that for companies in Europe and North America that are raising growth equity and have proven technologies that are ready to scale. We do this in 4 high-impact thematic areas across the agri-food system, really trying to touch all parts of the system. So we look at sustainable protein and fat production, healthy soils, anything on farm that can improve the sustainability of our agricultural production, sustainable supply chains, which is all about reducing emissions, plastic, virgin petroleum-based plastics, and food waste in the food system. And finally, healthy diets, looking at the nutrient density and the access to healthy foods across our system. We do this with a model we call specialized conviction capital, where we're forming long-term partnerships in companies we have high conviction have the potential to transform the system, where we can provide financial, strategic, and operational support to those companies. And I'm an investment manager, so I work with a number of ReFoods portfolio companies, mostly here in North America, leaving the European ones to my Swedish colleagues. Luckily, we have offices in Stockholm, Copenhagen, Boston, and San Francisco, so getting to have a broad geographic presence. Also, as head of sustainability, I work with our portfolio, internally at our fund and with our portfolio companies around measuring and managing impact and sustainability metrics, both for our investors and to understand that impact, and then also for our requirements as an Article 9 fund under the SFDR regulation. Really excited to be on this panel and to dive into things.
Excellent. Now we've got a great perspectives here from all around the world. So we said when we met to prep for this panel, we're going to keep things optimistic. We've had a couple of difficult years in agri-food tech. We've had huge highs in 21 and subsequent decline. So we're going to focus on it as much as positive as possible. And Doug, I'm going to come to you first because you said you've got a busy year, 14 investments over the last year or so, a $2 billion commitment to the sector. So you're really doubling down here when others are maybe walking away from the sector. What are some of the opportunities, challenges in Canada that make this the right time to invest, and for both Canadians and also international companies who are looking at Canada as a potential market to expand to?
Yeah, so the basic thesis for us is we need to enhance Canadian ag, so we can go out globally and try and find technologies, companies that we can bring into the Canadian markets to benefit Canadian farmers. So it's a very broad mandate. The opportunity set, how do we look at it? We're investing through funds, so call that $1 billion of the program, and directs is another $1 billion. The really simple way to describe it is we're looking at productivity and profitability. So what does that mean? Maybe I'll beg off the opportunity set question, because I think John in his opener covering those 6 key themes, that is the opportunity set. But things that we're really intimately involved in now or looking at in pipeline in the conversations internally are things like seed genetics. There's an intersection there of life sciences, AI, ML, et cetera, that's quite interesting, gene editing. Biologics on the crop protection side, we're investing heavily there right now, both in terms of team time and analysis, but also we've completed investments with a couple of different companies in those spaces. Areas where we can de-risk both innovation and adoption, we're trying to figure out some different business models for that with some partners, one of whom's out of the States, working on that to try and get the innovation question and the adoption question better answered for the Canadian farmer. We're looking at things that might be able to leverage some core Canadian strengths, particularly around greenhouses and CEA. So we continue to work on that. Those are a couple of the sort of really actual specific thematics that we're working on right now. But we're so broad, it's hard to narrow it down beyond what's in the immediate pipeline.
Yeah, brilliant. Well, it's great to see capital right across the spectrum there, across those areas, and that's available. PJ, I'm going to come to you next. You had co-authored an AgTech playbook last year, and I believe there's a second version coming out pretty soon as well. Maybe you could give us a bit of background on that, what you were trying to achieve, kind of key topics or advice for startups, and anything that's changed since the first version, that the last year and a half in a more capital constrained environment. What's new there that you'd recommend to founders?
No, I appreciate the question. For those who don't know, the Ag Playbook or the AgTech Playbook is really kind of a industry report made by folks within the industry. So this is made by former heads of R&D of the big ag corporations, CEOs from startups, folks within the banking and the consulting industry who've come together to try to put out a report to solve one of the two main problems we see in ag for a lot of startups trying to bring products to market. Those two problems being, how do I develop this product? How long will it take? How much money does it cost for which I need to finance that? And then the second issue is, once I build it, can I get the market to come? And can I actually go to market? And so what we realized was, unless you're in the walls of a Bayer, Monsanto, BASF, Corteva, any of the large majors, it was really hard to see too many examples of products making it all the way to market and the understanding of what that took. And so the first iteration of the Ag Playbook was all around teaching around the example of small molecules and how to bring a small molecule crop protection product to market and how long that costs. This next iteration, we wanted to add a lot more content. So there will be a whole new biomolecules chapter that's all around everything that is sub-living organisms. So think proteins, peptides, oligos, and anything that falls in that, and how long and the cost of developing those products bring to market. Actually, the main authors on that are 3 CEOs from Europe who've all worked on these products and got them through the regulatory cycles, including folks like Tamal Laurent from Micropep, founding CEO there, Patrice Sells from Biotalis, amongst others. We have a number of the reviewers here in the room as well. So once again, this is an industry report. But to talk about the difficulty of the market, one of the more exciting parts that this group might find relevant as well is we're going to have kind of a state of the market report, primarily authored by Scott Porter from Cascadia Capital, who was behind a number of the acquisitions and the M&A that we saw Alex report on before, right? So few people have a better lens, but also Adam Bergman, who's somewhere in this room, myself and others put a lot of kind of key feedback into this to kind of generate the content to reflect the state of the history of ag, the current state, and a little bit of prediction on the future of what might come. So that will be another piece. And then we have Jerry Helly and actually Eric Park from Anantha's team and ICL working on a state of the regulatory market. So how that shifted over the past couple of years and what might be happening in the next few. So understanding the regulatory market, understanding the history of where we've been and where the markets might be going overall, and then a whole new product class, 60 pages of new content coming forward. Really a huge thanks to all the contributors who've written that. Author's probably the wrong title to give myself. Coordinator might be a more accurate term, but excited to release that in January of 2026. So yeah.
Sounds exciting. Kind of moving to the rest of the panelists, any other advice or challenges you see with founders who common mistakes they make, or any advice you'd give in this more capital constrained environment that you'd like to kind of point out to some of the audience members here today?
Sounds trite, but falling in love with the technology rather than thinking about the customer.
Mm-hmm. Anything else?
I'd say know your investors, who you have, who you're looking at, what are their motivations and needs as an investor.
Can I build on that last point as well too? Probably the one CEO who stands out in my mind, I won't name by names not to embarrass him, but I still remember taking a pitch from a CEO who asked us, where are you at in your fund cycle? And we're not a standard fund 10-year cycles, but I asked him why he was asking the question. He said, well, we're at least 7 years from market, and if you're already halfway through your fund, it doesn't make sense for you guys to invest in us. That gave me so much more faith in that CEO, and even though it wasn't going to be a fit for an investment for us, was happy to introduce them to as many other investors as possible, because it taught me that they knew where they were, the timing, the understanding of the product, and how that interacted with the investor base. So I couldn't agree more.
Yeah, and add on that to that a little bit more too. I think one of the biggest piece of advice that always, biggest piece of advice I always give founders is think about how you want to build your cap table. Now I know in today's environment, it's hard to be as selective as you used to be able to be when there was, kind of an abundance of capital available, and the market wasn't locked up like it is today, in 21, 22, and a little bit after that. But don't just say, well, these are all the people I want to be my customers, so I should go after getting investment from them, or these are all the top tier ag and food investors on the financial side. I'm going to go after those. Be thoughtful. What do you want out of partners? And especially as a strategic investor, that is a big part of the value that we bring as someone on the cap table. We're not just writing checks. What other resources do you need? How, I always ask in a pitch, okay, so you're talking to Cargill right now, Cargill Ventures, but what would an ideal relationship look like to you? Not just us writing the check, but what resources do you need access to? How are you thinking about, product market fit? How are you thinking about market access? How, what does your customer pipeline look like? Yeah, and is there overlap there and ways we can be helpful versus just saying, well, Cargill's the biggest food and ag company in the world, so I really want them on my cap table. Okay, that's great, but what else? What else do you need? Who else do you want around the table? And be really, really thoughtful about what the capabilities and the specialties are of each of the investors that you're bringing in, because collectively that can deliver so much more than just a big check, right? Or a big valuation. Because at the end of the day, valuation doesn't matter if you're not going to get traction with your business to scale, or if you're not going to actually make progress towards a real legitimate business, long-term business model.
I want to stay with you, Erin, on that and kind of double click. Cargill is such a big business. How do you interact, the ventures team interact with the mothership, if you like, to define those priorities? You mentioned kind of narrowing in on some areas as well. So how does that relationship work? And then what are you excited about for 2026 and beyond?
Yeah, so I'd say so I've been doing this for just about 5 years now. So that's as long as we've had a centralized corporate venture capital group. So we invest on corporate balance sheet. So that takes some of the volatility and burden off of the individual business units because they're not carrying that themselves, which is great, allows us to manage it on a portfolio basis. But we work very closely with the businesses and the functions, the process and the way that we've set it up. Now, every CVC is different. It's based on what your mandate is, what your organization wants and needs, and then also what the tolerance for risk and change is. So we work actually very closely with the businesses, so enterprise strategy leads I'm talking to regularly. Individuals on my team actually have assignments to connect in those high growth areas that we've defined as part of our long-term strategy. They really embed with the business development and the strategy teams and help bring a lot of the outside in. So information that we're seeing out in the ecosystem that people running businesses on a daily basis don't have access to. We can get that. We can hear what investors are saying. We can see the pitch book data. We can, talk to founders. We can take pitches. All of those things allow us to have a very give and take conversation about what does that investment game board need to look like? Who should you be partnering with? What technologies are out there that are solving this problem that your business has, or really are differentiated in a way that's going to help you deliver against those growth objectives? So we work very closely with them in defining that. It's all driven ultimately by the corporate and the business strategy, but we kind of marry up what's happening externally with kind of an outside in and then an inside out to try to find those areas. Frankly, we want to grow in some places that aren't investable, right? There are some things we want to do that we're VC is just not hot there, right? There's not a lot of innovation in that space, so we'll figure that out outside of making investments. Conversely, there are areas that are really hot that we're also strategically, we're not, everyone asks me all the time, are you investing in AI? Ostensibly, no. We don't need a seat at the table on those companies that are developing large language models. Now, do I want to leverage that capability to deliver better productivity, faster product development cycles, molecule identification for, breakthrough R&D and science solutions? Absolutely. But I don't need to be at
the like deep tech front end of that. I need to be at how do you operationalize that into something that delivers value and differentiation like in the market. And then as we take things, so back to your original question, as we take things to our venture board, which is really our governance for deploying capital in these equity investments, we actually present alongside those commercial leaders. They have to give a strategic rationale for why this investment will be made, what value this is going to add, how we're going to execute against it, and what their commitment is to that. And then my team presents, I guess I'll call it the more technical pieces of what the structure of the investment looks like, what rights we're getting, and how we're going to deliver the financial value and look after that company as part of a portfolio. But it is very much a partnership and kind of a co-development and identification process for investment.
It's a great breakdown because a lot of people see such a big company like Kaiser. Where do we start? So I think you've done a great job breaking that down. Lena, I want to come to you. ReFood takes a joint impact and financial returns approach to investing. Can you speak a bit about how you measure that? You mentioned that in your intro as well. And then where are you seeing the opportunities to deliver both large financial returns but also large impact as well? Because maybe it's not the same everywhere, but what are some of the areas that you're really excited about right now?
Sure. So our approach to understanding impact in the food system starts by defining what a sustainable and resilient food system would look like. And to do that, we looked to research from the Stockholm Resilience Center into the planetary boundaries, the essential systems that make life livable on Earth, that make the Earth habitable for us. And the pressures that the entire human race are exerting on those systems, and then especially the pressures that the food system is exerting on those systems. There's a lot of research out there about what those pressures are, the contribution of the food system to greenhouse gas emissions, to nutrient flows into our oceans, to cropland use, water use. So understanding those impacts and then looking for technologies that can reduce those impacts and turn a negative into a positive and enable us on a global scale, all of society, to exist within those planetary boundaries. That's the first thing. That defines our kind of environmental impact areas. However, it's one thing for the food system to not put pressure on our planet, but it still does need to feed people, right? At the end of the day, everybody needs to eat. We need access to healthy, nutritious food, and we need to ensure that the benefits and the value created in this food system are shared equitably throughout the system. So we developed a sort of social foundation and the boundary between the social foundation and then those planetary boundaries. That's what we're working towards. So that's how we think about the impact of the food system. Where are those pressures greatest today? What technologies and innovations and business models are available to a PE/VC investor to help reverse those negative trends and turn them positive. And when we meet a company, we've done work before we even meet them to understand the segment that they operate in. I mentioned those 4 themes. We've taken those 4 themes and broken them into 70 plus segments, each one representing a group of technologies or innovations that we believe is going to contribute to that food system transformation. So by the time we meet the company, we have an idea, I guess, of what impact they're going to have, and then we work with that company to kind of understand and set up stage-appropriate methods of measuring and monitoring that impact. I think one thing we really try to stay away from, though, is companies that are resting on a green premium or a consumer sentiment around sustainability for the financial value creation. Instead, we look for the companies where they are meeting a real unmet need in the system for a consumer, whether that is something around a cost structure, a yield deficit that we need to overcome, a taste issue for a consumer-facing product, what have you. And by meeting that consumer need, they are also creating that sustainability benefit. And so by growing the financial value of their company, by scaling their product, bringing it to more consumers, they grow financially, providing the return that we look for as an investor, and they grow their sustainability footprint, their impact. So that's where we try to find that intersection of those two things. And I think given the amount of cost that is built into our current food system, the amount of sort of negative, unsustainable impacts on consumers of those products, there's huge opportunity for this to happen. So you could look at this on the agricultural side, whether you're, I think Alex mentioned a number of the drivers. Those are the ones that we look for, and we look for the solutions that are affecting those. Biologicals, ag robotics, solving labor shortages, food as medicine, addressing the sort of nutrient crisis and food as a driver of negative health impacts. So see opportunities across the spectrum, and more than happy to get into it, but I think it's a little too much to answer just in this short time frame, because like I said, we just see so much opportunity here for that.
Fantastic. Maybe open up to the rest of the panelists. Any specific technologies or areas you're really excited about where there's a double bottom line approach, driving impact and also financial returns as well? Put you on the spot.
Yeah, so happy to go first. So actually a group of our team in Berlin works in a similar capacity. Very triggering for me. I like what you say a lot here. We've created our own measurement in partnership with the Happiness Research Institute, or what we call wellness adjusted lifetime years. So it's this concept of whether it's a healthcare solution or an agricultural one, how you impact humanity and kind of create longer lives and well-adjusted lives at that point, right? So you don't just want to live to 100, you want the years, 70 to 100 to be good ones and not just hard ones. For us, the thing that Lena said that triggered me the most is we went through a generation in the last 4 years where if you put kind of a carbon impact or a sustainability message in your pitch deck, you might be able to go raise on some funds that were specifically focused on that. But I think what we saw from what Alex showed was, the number of investors that went up to 3,500 or so has dropped back down to 1,000 or so. That's still more than we had in 2015, right? So there's still plenty of capital around the table. But the companies and the investors who are backing them are the ones who do have a bottom line product that solve that real world problem. And so for us, and this was something, I'll give you guys the inside look at conversation we had at the investor breakfast in the morning. We all believe that you have to have a business model that makes sense in a hard market as well as in a good market. And sustainability is something that we all care about. But if you build your business only around that lens, it's not in itself going to survive the hard times. And so for us, when we look at a company, if they have a sustainability story, that's amazing. If it's not solving something that is techno-economic away from sustainability on its own, if it's not increasing yield, if it's not making the OpEx of a farm more efficient, if it's not bringing in capital from a fintech solution or an input that's solving a disease or a pressure that you experience on the farm, it's going to be hard to find the justification behind that, right? Sustainability is something great to raise money behind, but it's not going to take a company to profitability. And so for us, the companies that we're looking around and the way we've invested is we haven't done a lot of things like carbon market investments overall, but what we will invest in are inputs or measurement tools that will measure the impact of those elements, because it's not just measuring carbon, it's measuring nitrogen, phosphorus, and potassium levels. So I might change my variable rate use of fertilizer. I was sitting with Patrick from IFA a little bit earlier, so I'm very much on a fertilizer kick in my mind. And so I think those are the solutions that we're looking for. And look at I think someone else said in the room this morning, look at the sustainability stories, the cherry on top that we all care about, but it's not going to drive consumer behavior and it's not going to drive your profitability.
Yeah, one data point that really sticks with me is with population growth projections. Like by 2050, we're actually going to have to increase food production by 70%. That is crazy when you think about all the implications that has on the entire value chain, from farmers all the way down to consumer behavior. But that's not just calories, right? Like PJ was talking about, this entire life cycle of consumers. So early life nutrition to elder nutrition, like the calories that people are consuming need to be more valuable, right? There's more demand on those to actually deliver some functionality or some value to increase, longevity or quality of life, or, have a bigger impact on health. So like the food as medicine that you were talking about, right? These are all concepts that, really imperative that we think about and finding solutions, because like doing things the way they've always been done just isn't going to get us to basically almost doubling, right, food production in the next 30-ish years, right, 25 years.
It's global impact, so we've talked about impact quite a bit. Global, we're here in America, the US dominates the landscape, but Europe has come up in some of the pieces here. We've got delegations from Australia, from Asia, Latin America as well. Any regions that the panel is excited about? Doug, you're looking internationally. You're excited about the Blue Jays in Canada, obviously, but what else around the world? What regions do you see innovation coming from that could be applied to Canada, for example, that is maybe overlooked?
The roundabout answer, to stay on the Jays theme, is Otani and Yamamoto. Asia is definitely of interest for FCC to move to. I'm in Singapore on Sunday to participate there in some conference and other meetings. I think there's a collection of global investors, Temasek being one of them out of Singapore, that would be very interested to figure out how to get them more into the Canadian market. So Asia for sure is on the near-term roadmap.
So Singapore, any other countries across the panel here?
I mean, one thing from our perspective is in row crop agriculture, I mean, Brazil has never been more important, right? It has crossed the line of being the biggest exporter of corn, of soybean, and sugarcane, right? These are some of the biggest crops in row crop agriculture today. And so given the state of the international trade market, it's only become that much more critical. So we keep seeing, and for companies looking to enter into the row crop market, US has always usually been the first step, and then you say, okay, we're going to step to Argentina or Brazil next. A lot more companies now are doubling their effort in Brazil or in South America, and we see that as a continuing trend.
Yeah, I was gonna say, I knew what you were going to say. I'm like, LATAM. I'm like, the world has a way of rebalancing itself, right? So regardless of what happens, as dynamics shift on various continents, like that demand from a consumer perspective, like doesn't go away. People need to eat, right? So finding, it's like water finding its way through a crack in a rock, right? Like there's always going to be that rebalancing. And I think, from seeing who's really grown and taken advantage of that, and there's so much opportunity, I think Latin America really does stick out in my mind as well. There's just so much, and we've seen just really a boom in technology there too, that I don't think there's been as much of a consolidated, concerted effort to drive in the past, especially around food and ag. Yeah. So that's exciting.
Going to bring in the sort of European focus here. Europe is big and diverse, and so within Europe there's a couple different areas, regions where we're seeing food hubs or food valleys kind of popping up with really interesting collaborations between governments and regulators, academia, corporates, and then the startups, and then the investors coming in to support that. One is in Copenhagen. Denmark is really investing in this. Another is in Switzerland, where ReFood has no office but a portfolio company. And so I think seeing those groups coming together and working together on food solutions, a lot of them having to do with fermentation, with biotechnology, is really interesting and a signal to us that these governments see investing in food and supporting the growth of food tech and food solutions as part of food security and food sovereignty in those nations. And that has implications for investors, obviously, as those opportunities are created and have that sort of underlying support. So it's not just the investor startup, but then there's all these other bodies that are also engaging in scaling those technologies.
Thanks for sticking up for us Europeans there, Lena. Good to hear. I was hoping for Ireland to come up on the countries list, but maybe next year. We're coming up on time. I want one final question for each of the panelists. Maybe, Lena, we'll start with you and come back this way. Global Impact is a 10-year vision to 2030, and we'll see what happens beyond that. Where are the ag tech unicorns going to come from by 2030? What technologies would you be backing? Is it AI? Is it biotech, robotics, something else? Lena, we'll start with you, and then PJ can take us home here as we get back this way.
It's a big question. My answer is a sort of combination of technologies. I think AI is an enabler for a number of these technologies, and we're going to see the biggest potential for companies that are using AI to accelerate robotics, to accelerate biotechnology, to accelerate fermentation, what have you. So that's my answer.
Doug?
Biggest technology? Yeah, it'd be hard to not go with AI in terms of it just intersects across a whole bunch of different areas, and it's going to drive it. Yeah. Improvements in each of those areas.
Erin, anything different?
Gosh, I'd hate to say the same as what everyone already said, but yeah, I think what's most exciting and interesting is not just the amount of change that's coming, but the speed with which it can be done, right? So, and I think, AI, machine learning, coupled with other technologies, right? So like, say, computer vision technology backed with AI, machine learning models to, speed up like selective breeding of plants for better genetics, right? Like all these kinds of compilations of these technologies, but they're advancing at such a faster rate. So it's almost like a combination of these like minute changes that are going to result in much faster changes in shorter periods of time, is what's really exciting to me. Yeah.
PJ, you have the hardest job after something new.
Bring it home. So I'll give a slightly different version of the answer. So I think it's automation that enables AI will be wildly critical. So the example there is we talk about AI will drive R&D discovery. You still need rapid assaying capability to test the thing that AI has predicted will be true. So physical world will limit the AI simulated world unless that also keeps up. So that will be a huge growth area and opportunity. And then the other area for us is the next wave of genetic tools. We're at this cusp of, not just GM, but gene editing, epigenetics, and a few other tools coming in right now where it's super exciting right now. And both Tom and us from Corteva and Bayer have invested in Pairwise, which is kind of a leading company in the gene editing space. But one of the things we believe is, Corteva's partnering with Pairwise, Bayer's partnering with Pairwise. If you want to go far, you have to go together. So it's kind of a shining star example of partnering across the ecosystem to really bring products to market for success. So I'll say next wave genetic tools and automation.
Okay, brilliant. Thanks very much for all your perspectives. Hopefully everyone's optimistic after this panel, and I believe we're going to hear some pitches now. So please give it up for my panelists today.